welcome. You're watching Closing Trades on ET now, and the closing trades on this Friday afternoon are definitely looking tepid because 17,900 got tested on the Nifty today, though we're off the lowest point of the trading session, and almost 17,930 is where we are at for the Nifty. The bigger pain point for the market really is the Bank Nifty today. That's seen a sharp cut of almost 600 points, and it's both the private lenders as well as the public sector banks which are coming under pressure. Though of course the public sector banking names are reeling under more pressure because SBI, Bank of Baroda, these are some of the names which are down and out in the trading session. In fact, for the entire week, it's the PSU banking index which has seen a cut of almost 3%, and Nifty Bank 2 is down about 1.2%. Separately, if you're looking at the other internals of the market, it's IT as well as real estate which is seeing some profit booking today, and cement stocks and capital goods are actually seeing some buying action. So cement, of course, had the positive news flow about a price hike coming in. Ultratech Cement also commissioned some of the capacities, and that's the reason there's a bit of a sentiment support there. Global markets are also a tad bit tepid, not much of the moves coming in from there, but the futures for now are suggesting a downtick of 200 points on the Dow. And also remember, globally, the US 10-year yield is now inching towards that 4% mark, 3.9%. So the risk off is definitely at play as far as the Indian market is concerned, Aisha.
Oh yeah, absolutely. So today really it's cement and more cement. So Ultratech Cement holding up 2.5%. Ramco looking good, Shree Cement, JK Cement, these are all your big buzzers today. And of course, L&T is definitely a big contributor to the Nifty move today, although the Nifty is down 117 points. But I guess it's not cracking further because L&T definitely is supporting. On the flip side, though, of course, there's Nestle, Adani Enterprises, SBI, M&M is cracking hard, Innocent Bank is down 3%, HDFC Life, Infosys, Wipro, Axis, TCS, ICICI Bank, they're all the ones which are weighing heavy on the index, which looked like it's going to only be down about a little bit or a soft start. From there, we've definitely worsened, as has the breadth, by the way. The breadth is well in favor of the declines. We're sitting at a 157 count to the declines with just about 37 to the advances right now. Good time as any to bring on board a chartist and fundamental expert and talk about where else the market is likely to head from here. Kunal Bothra, Naresh Mirani, Rahul Shah join in as always. Kunal, let's start off with you. Given up 18K, how significant is that?
Yeah, it is significant. I think we've broken back below the psychological mark of support for the index, and I think more importantly, large cap names which are participating since the last couple of days, they've stopped to give more traction to the indices. So that's the concern for the index. Yes, there are other large cap names like Shree Cement, L&T, etc., Ultratech Cement, which are performing quite well, but then there is also a lack of strong follow-through price action. The weakness in the Bank Nifty is the one which is concerning for the markets right now, because that also contributes to not just a strong weightage to the indices, but even from a sentimental push. The data also indicates today, at least from the start, that there was a good amount of call writing which was happening on the Bank Nifty. Specifically, it started off with the 42,000 strike for the call for the monthly expiry, and then now it's trickled to the 41,500 mark for the banking index, which means that possibly for the next 3 to 4 days, we may probably remain under some bit of selling pressure, and 41,500 for the Bank Nifty could act as a resistance.
All right, Naresh, are you also worried about the breakdown that we're seeing in the Nifty Bank Index?
So I'm not worried per se on the markets, because what is happening is over the last almost 3-4 weeks, every time the market has gone up, we've gone and got excited. We've gone a little down, we've gone a little worried. But if we look at the last 3 weeks, we've just been at the same place. So if you pick up a Bank Nifty, we have been around that 41,000, 42,000, 41,500 mark roughly all through. You pick up Nifty, you have been at 17,800 to 18,000. So the index has gone nowhere. So essentially, till the time we don't see a strong move, or at least some very strong leadership from 2-3 heavyweights in either the Nifty or the Bank Nifty, we are stuck in this range. The bias remains positive, because overall, if you look at the broader markets, if you look at a lot of stocks, we are still trending higher on the broader markets in terms of selective names. Sectoral rotations continue. So as of now, we are just at the same place. So the bias is positive. The first indication for me would be when we start breaking 17,800.
Let's also welcome on board then Rahul Shah before we talk more stocks and get in more strategies. Rahul, clearly it's the entire cement play, and after a fair amount of underperformance that one has seen, I think in the last 3 or 4 odd months, and we just get a view from Kunal and Naresh as well on the same. What do you make of the move on cement?
I think if you look at post-budget, I think in the announcement of the theme infra by the FM, I think post that, I think we've seen some kind of momentum again building back into the cement stocks, and there were mixed bag of results from the earnings perspective. If you look at the biggie Ultratech, was slightly below than what the street was estimating, but then it was recovered sharply post the budget. So I feel the kind of environment which we are getting into a focus on infra trust for next couple of years, and I think just to give you a perspective, like we have the spend of around budget talks about 10 lakh crore spent on infra activities, and I think the same in few years back, so maybe 3-4 years was around 3.5 lakh crore. So I think this push will obviously move the cement stocks up, and Q3 and Q4 remains the best time for the cement companies. So obviously the flavor will remain for some time, and obviously the price hike in 10 to 15 per bag comes last night. So it seems like, I think this time again the GST meeting for the next week on the cement things which is going to look for it. So I think all things favoring for cement for this at this juncture, and we're seeing that overcrowded trade in financials just seeing some kind of a halt over there and shifting to material stocks. So that's one of also a key trigger to look at in the cement stocks.
Okay, fair enough. Meantime, just let's run you through some of the stocks that are in the news in today's trading session. L&T in the spotlight, and that's largely on the back of the Credit Suisse note. They're pretty bullish on the likes of L&T, Siemens and Cummins, saying that the investment cycle is picking up, and the short cycle data reflects a 15% 3-year CAGR, and they are retaining their overall positive stance. The stock up and away in today's trading session. Meantime, you've also got Minda as well as Precall that are in the spotlight. Do remember that's largely on the back of the acquisition of 15.5% stake for 400 crore rupees, though the management has categorically said that the deal is merely a financial investment. And we just highlighted cement as well. Antique has said that the cement prices have been hiked by 15 rupees per bag, and saying that this hike will be effective midnight today. It's the biggest hike that we've seen since April 2022. Where a hike of 22 rupees was taken. So all of these cement stocks continue to remain in the spotlight. Kunal, let's get in a view from you then as to how you're looking at the cement stocks on the charts.
Yeah, most of the larger cap names are looking very attractive. In fact, I think if I'm not wrong today, Ultratech Cement as well as Shree Cement are the ones which have given confirmation of a breakout. Ultratech Cement breaking past about 7,250. And that too on the back of some very strong candlestick formations. Same is the case with Shree Cement, I think breaking past about 25,500, 550 mark. I think both these stocks are very strong indications that the sector is getting into a revival phase. And then you look out for the mid-cap names. I think the likes of Ramco Cement, for example, that stock has also done reasonably well, risen up from 700, 720 to now 745, 750 plus, at least in the morning. So that generally goes to show that it's the entire sector which is looking quite attractive. I would still prefer the larger cap names more predominantly. So I think the likes of Shree Cement, particularly about the 25,500 mark, that looks very attractive on the charts and confirming a multi-month breakout. So if I have to pick and choose from the larger cap name, I would probably prefer Shree Cement first.
Okay, Shree Cement it is. That's the pick coming in from the cement sector from Kunal. But why are cement stocks buzzing today? Let me take it across to Mansi and find out exactly that.
Cement sector is witnessing a strong up move since the start of the trade today, and the reason behind this upsurge is the pricing strategy. The recent price hike news which has come in for the sector. Yes, the cement companies have hiked prices by rupees 15 per bag across the regions is what the latest news we get, and the price hike, the current price hike will be effective from midnight today. Now let me tell you why is this important, because this is a price hike taken by the cement companies after a gap of around 3 to 4 months. Cement companies were facing a little bit of difficulty into their pricing strategy, and there were less price hike scenarios which we did see into the last months, and this is a price hike news coming in after a gap of around 3-4 months. So that is an important one. Another interesting thing is that this is the biggest price hike since April 2022. In April 2022, a price hike of around 22 rupees per bag was taken by the cement companies but this one is another biggest hike which is coming in after that. So clearly a gap of 3 to 4 months, and then we see a price hike, and again this is a biggest price hike after a gap of almost a year is another positive as well. The extent of absorption of these hikes may act as a key trigger for this sector going forward, and along with the same time, if we see there are a lot many news flows which are doing rounds for the cement sector, which keeps the sector into an active mode. And at this present time, if we see be it the large heavyweights or the mid-cap cement plays, all of it are performing in trade. Keep an eye on Ultratech Cement, Shree Cement, JK Lakshmi Cement, India Cement. All of these cement counters are doing great into the trade.
Okay, apart from the cement pack, you also have some of the select capital good names which are doing well. So we of course talked about L&T, but from the broader market, you have Timken India, which is up a good 6%. JBM Auto, the auto EM player, is up around 5%. You also have other names which are doing their bit when it comes to the entire capital goods sector as well. Duresh, your take from the entire pack, which is the top pick, and let's throw in ABB and Siemens as well.
So clearly, I maintain L&T remains the best bet in the whole capital goods space because that is a stock which has been showing a lot of relative strength as well as has done a outperformance in the near term and a relative underperformance a little longer compared to Siemens and ABB. And it remains the largest stock also in the sector. Today also the stock has made a new swing high, crossed the budget day highs. So clearly relative strength is there. So L&T is the one which will go to 2,500 in the near term. And what we are seeing is a lot of small cap names which have done really well in the related to capital goods or infra names, or something like Action Construction, Sangvi Movers, Bharat Bijli. A lot of these names are doing well. In that, TD Power looks interesting. That's given a short-term breakout today.
Of course, you can also add Schaeffler India to that list. That stock is sitting with a gain of around 4% on account of the good earnings performance that the company has delivered. But apart from that as well, there are a whole host of stocks which are buzzing around. Of course, Nestle is one stock that deserves mention, given that it's the biggest loser at the index level. While the street was excited about the margin performance yesterday, on the con call last evening, the management was sounding a tad bit more cautious. They were talking about how volume is taking a hit on account of the shrinkflation and the grammage reductions that have happened as well. Rahul, your take as far as the entire FMCG pack is concerned, because the earnings weren't really impressive and there's a bit of a dichotomy when it comes to the views coming in on rural India.
I think the earnings were by and large in line with the street was estimating on. By and large, what we were also estimating, the profits and line margins in line. But I think what is happening is I think we are seeing that most of the consumer names are just getting hampered. If you look at the entire FMCG as a basket, haven't been performed. The numbers have been by and large straight in line or slightly below. But I think what street is looking at right now, I think the valuation game. If you look at most of the, the theme has been that where we've seen that IB stocks getting derated, and we've seen that most of the consumer names. So I think same thing is with Nestle as well. So we might see some kind of still sell-off to continue in Nestle from current levels.
That's the view coming in, a little bit more downside expected from Nestle. Moving right on then, in an interesting development, do remember Minda Corp has bought a 15.7% stake in Precall. Let's take it to my colleague Sharad. He tracks all the latest developments on this story. Sharad?
Well, yes, two stocks are in focus today. First one being Minda Corp and the second being Precall. And Minda Corp has come out in the exchange filings and have stated that they have acquired 15.7% stake in Precall for a total consideration of almost 400 odd crore rupees. Now, they have also stated clearly that this is a merely financial investment and not a strategic investment. And apart from this, the entire deal actually happened at around 209 rupees per share, and this was for almost 1.92 crore shares. Now, apart from this, the main question arises is why has Minda Corp taken this investment and labeled it as a financial investment? Of course, do remember in FY19 itself, the company had raised a QIP of almost 310 odd crore rupees, and since then the cash levels on the books had started increasing. And do remember, the ROC numbers were also getting impacted. No major capex plans were also undertaken, and because of the disposal of higher amount of cash, this investment might have been there. Now just looking at the numbers, if we see for FY23, the cash levels are expected to balloon up to more than 500 crore rupees, and we can also see the decrease in the ROC numbers which was seen in the year FY22. But apart from this, what makes a synergistic benefit to acquire Precall, and what we have gathered from analysts is that if it is a takeover candidate, what would be the important factors which would be making a Precall a good target? And firstly, of course, the important thing is the product diversification, increase in product depth, and also the brand recall overall. Now, apart from this, we'll look at what the management had stated to ET Now earlier in the day, and they have stated that the company will not allow any form of hostile takeover, and they'll always have their firefighting strategies ready. And lastly, they have also stated that the institutional investors are backing the promoters, and the promoters will be there for the long-term plans of the company. Now, looking at the promoters, they have almost 36.5% stake in the company, while the retail has almost 23 odd percent. FPIs have almost 12%, while the mutual fund industry has a 4% stake in the company.
We stand committed to this business, and that's all that I can say. And we will not allow a hostile takeover. We will have our counter offers if necessary at the right time. This is a complete bolt out of the blue that I was not aware of. We have absolutely no business association with Minda. In fact, they are our competitors. And so this has come as a bolt from the blue, yes. And I don't know how much of credence to give to this information also, because I am getting counter reports from the market saying that this is just a rumor.
Welcome back. Well, we have slipped below the mark of 17,900 yet again, very close to the lowest point of the trading session. It's Adani Enterprises, which is seeing a cut of 4%, and then the banking names, the likes of IndusInd Bank, SBI, these are the ones which are pulling the market slower. And of course, even Nestle, M&M, SBI Life, these are some of the other counters which are seeing some amount of profit booking, and even HDFC Life for that matter. So that entire insurance pack is reeling under acute pressure. And look at the banking names. All the constituents of Nifty Bank are actually trading in the red. It's been led lower by IndusInd Bank, down with a cut of around 3.25%. Then Federal Bank, Bank of Baroda, SBI are some of the other names which are down and about in the trading session. Well, let's also take a look at some of the price volume buzzers in the trading session today. Vodafone Idea, that's seen a cut of almost 5 to 6% today. It's been forming lower highs for 5 consecutive sessions. It's trading below all the key day moving averages. And remember, when the data, subscriber data for the December came as well, that pointed to the fact that Vodafone has again lost out on subscribers to the tune of around 2.5 million. So that's the cut we are seeing on that counter. Ipca Labs is the other one, which is slipped below the 50-day moving average. It's hit a 2-year intraday low, and the volumes are almost 5x of the 20-day moving average. UCO Bank as well, declining for 5th consecutive session, has hit a 2-month low. Naresh, in fact, not just UCO Bank, a lot of these banking names are actually seeing a deep cut as well. And you have a lot of these names which are under pressure, whether it is Bandhan Bank, Federal, AU Small Finance Bank, SBI, Kotak. Kotak is seeing, in fact, a cut of 2%. Axis Bank down about 1.5%. Even HDFC, ICICI, etc. What's going wrong for the Bank Nifty, and what do you think will take it higher from here on? What would really call for the reversal in the trend?
So what we've been seeing is yesterday was an uptick for Bank Nifty, which did not sustain. We are seeing a sideways consolidation in a lot of banks. We've not really seen a trend change move as of now. So it's very difficult to call a day-to-day move. So, and say if you go to the budget day for the Nifty, the Bank Nifty, we had a range of 39,500 to 42,000. That's like a 2,500 pointer range. The range has contracted over the last 2 weeks. The range has been say 41,000 to 41,800, 900. So till the time we are above 41,000 levels on a sustainable basis, there is nothing much to call, or rather a bigger tick comes in. The low which has been there is 40,600. So overall, not a major change in terms of trend. Every time it has gone to 42, we get excited. Goes closer to 41, we get scared. But in the Bank Nifty, one stock which could change the game is HDFC Bank. Unlike the other banks which have gone through their upcycle and now a correction in the sideways move, HDFC Bank has gone nowhere for the last 2 years. It is available at 1640 where it was in January 2021. So that is the stock which could actually take the index out of this major range. So would be watching out, say 1550 or 1720, whatever breaks. That is the point of time we could get a trend in the banking space. Otherwise, we'll see this up, one day down movements to continue.
Rahul, do you have a view on Pricol or Minda Corporation? Do you track any of these names from the OEM space? Rahul?
No, I've not been tracking. No, I've not been tracking any of these OEM names, and especially Minda as well. So, won't able to comment on.
Sure, but the entire auto sector, auto OEM sector, what are the top bets that you're watching out for?
I think auto as a whole play, I think if you look at this quarter numbers, I think a lot of auto names reported a strong quarter. So if I talk about starting with four-wheelers like a passenger vehicle name like Maruti, which reported a very strong quarter, M&M also with the numbers were pretty decent. So my sense is I think Maruti followed by M&M. Thirdly, I think in as commercial vehicles play, I think Ashok Leyland numbers are also pretty decent, and plus launches of EV the buses are also we've been seeing a good traction on it. So I think all three names looks quite interesting. Starting with Maruti, which looks like I think the best mix that what we can see. We are seeing demand rural as well as urban plays, plus a couple of few new launches also and a good responses from them. Thirdly, I think softening commodity prices also, which is augured well for them. So all three things augurs well for Maruti, and looks like the stock can be much better from here. Similarly, I think Ashok Leyland, as I discussed, the commercial vehicle, we are seeing it in an uptick in it, and we will see the ground reality things improving on the economic front. I think spent on the commercial vehicles is visible, and obviously in the play of EV, which is rolling out for Ashok Leyland very well. So my sense is of both these two stocks should do well, and obviously Minda and Minda decent quarter. We've seen a sharp movement in one of the best performing auto names in last year, 1 year if we look at it. So the numbers are pretty decent. So all three stocks looks quite promising in our version.
Okay, time now to get the closing trades from our chartists as well. Kunal, what's a closing trade that you're executing?
I'll still go with large cap name. Reliance Industries is holding up above the 2,400 mark. That's a stock which has done reasonably well over the last 2 days. Yesterday and today the stock is consolidating, but again the bias is extremely bullish for the stock. Would be looking to buy the stock as well as recommend to clients.
Naresh, what about you?
So taking a risk reward trade on Wipro, which has not seen a bounce in the whole IT reversal. The stock has corrected from 700, 750 all the way down to 400. The last 2 week lows are at 400. So at 405, that's a 1% downside risk and an upside of 5-10% if the bounce plays out.
Okay, let's take a very quick break with news. Adani Enterprises now down 4.5%, Biocon down 4.5%. There's of course the Idea, which has been a rank underperformer from the word go after the subscriber numbers dipping for a 20th consecutive month. And then of course there's MGL and IGL as well, which are weighing heavy on the markets today. Quick break. When we come back, the last half an hour of trade this week.
Thanks for staying on with us. Still tuned into closing trades. A lot of stocks that are managing to buck the general trend. Take a check-in on TCNS Clothing, 14%. The Shilpa Medicare as well. That's a buzz in today's trading session. Among the lot as well, you've got something like a Timken India that's active in today's trading session, and something like a Shuffler India, VMart, Aster DM, as well as Mishra Dhatu. Those are some of the stocks that are a buzz in trade. 17,932 on the index is where it's currently at. Let's also bring on board then Dinesh Thakkar, who's the Chief Managing Director at Angel One, joining in to talk a little bit about the change in leadership that we've seen, as well as what the outlook is when it comes to the in-principle approval for the AMC business. Thank you so much for taking time out and joining in. Just wanted to understand, given the fact that we have that, Mr. Narayan, the CEO's resignation that we have seen, what are exactly the succession plans that have been put in place for the company?
Yeah, so resignation of CEO Narayan was based on his personal reason, and when it comes to company, we are definitely looking out for a capable candidate who can take this whole growth plan forward. In the interim, my whole team would be reporting to me, and we have a quite strong team of CTO, CPTO, and Chief Business Officer. Recently only we had consolidated this division of product and technology and created a position of CPTO. Chief Product and Technology Head. So Mr. Dinesh Radhakishan has taken that charge. And we have a capable leadership team in terms of CTO, that is Jyoti Raiturkar, Product Head Ankit Rastogi, and Business Head recently who have taken charge of consolidation on business side. So overall, I see a good team in place. So there is no impact in terms of whatever growth plans we have decided for us for next 2 to 3 years. But definitely we are looking for a candidate who can take us from this level where we are and should help us to fulfill the aspiration that we have for next 2, 3, 4 years. That is related to super app, to bring in lots of other services on this app broking app that we have. And fortunately, like for us, like we have rolled out super app for 100% audience.
Right.
And now we are looking forward to add more journeys on that super app.
Sure, Dinesh, would love to chat a bit more about the super app, but just to complete the point regarding the change in leadership, did it come as a surprise to you? Because the last time we spoke, Mr. Gangadhar was sounding quite committed to the business. So was it a bit of surprise? Any more details that you can give us around the personal reason that have been cited? And going forward, will the CEO position remain vacant? Will there be a position which will be taken over by somebody else, or you're looking at abolishing that position completely?
First of all, like the CEO resignation was nothing I would say that we were anticipating or all that. So definitely there were some kind of dialogue between both of us, and he wanted to resign based on his personal reason. So on succession plan or whether this position will remain vacant, till the time we are able to find a suitable candidate who can take us forward in a direction what I mentioned for next 3 to 5 years, we are looking out for a candidate who can be quite seasoned and who would be having an experience of not just broking, but apart from broking, should be having a good experience on other products that we are going to offer. So yes, we are out in the market to get a suitable candidate, and this till the time we get that candidate, we have enough leadership team who can take care of growth plan that we have envisaged for this coming few quarters.
Dinesh, should one assume that it will be someone outside the Angel circumference right now? You would not be looking at an internal candidate?
So we are looking at, we are always open to internal as well as external. But when we look at our aspiration that we have for next 3 to 5 years, as I said, that we want somebody who has an experience on selling multiple services on digital platform. So based on that criteria that we are looking at, most probably we have to look outside for those candidates.
The in-principle approval for setting up the AMC business as well as to be a sponsor for a mutual fund. Could you talk to us about what exactly are the plans on this regard, and by when should we see that AMC business as well as the mutual fund?
So just recently we got that in-principle approval for AMC. So we have started the process of operationalizing based on whatever recommendation is there from SEBI. So we have to form a trustee company, we have to form an AMC company, we have to recruit key people and get vendors on board. So that process has started. So we are expecting within 6 months we will be able to submit our final plan to SEBI, and post we get approval from SEBI, we will be able to operationalize a few schemes in that AMC. So overall, I think it would be around a time frame of around 12 to 15 months, which will take from here on.
And Dinesh, before I let you go, the trends on the ground do suggest that at least the new addition of customers is slowing down. Plus, there is a lot of redundancy and deactivated clients on the apps as well. What are you doing to kind of increase the customer interface, etc., and onboarding fresh customers?
First, we have a very robust marketing plans, and our run rate for past few months has been in the region of acquiring 3 to 4 lakh customers consistently. And we at Angel don't feel that this is a time to slow down. We would continue with our aggression plan of acquiring customers. And we feel this is a time where we would be able to gain market share. But if you look at lifetime value of a customer, what we are acquiring, they will remain on the platform for 5, 7, 10 years. So we are not very much concerned about momentary slowdown which has happened. If you look at our numbers also, they have been showing constant growth. And when we look at our future plans, where we are talking about selling multiple kind of like service to the same customer, we would like to remain aggressive and acquire more customers in coming quarters.
All of those details. Good to have you on board, giving us details on the succession plan as well as the overall business. Meantime, let's connect with Chakri Lokpriya as well, who's joining in on the show. Hi there, Chakri. Let's understand what your outlook is then when it comes to the earnings season. Pretty much done and dusted. Have there been any key takeaways in terms of hits and misses?
Hello, hi there. Yes, in terms of the earnings season, clearly, it's been one of where there has been an input cost pressure across manufacturing companies, which means they don't have much of a pricing power. Second, the interest rate hikes that have taken place have taken some kind of toll. So if you look at FMCG companies, consumer companies, demand is slowing down. I think these are the two major trends, and still overall the services companies or export-related companies still fairly remain strong. IT is a case in point. And as long as US continues with its one-trick pony of to counter inflation, they raise interest rates, and then but the demand continues to be strong, and therefore they continue to raise interest rates. So this is going to have a trickle-down effect on India, has to also increase interest rates and therefore slowing demand.
Okay, fair enough. That's the view coming in. Meantime, Naresh, let's get in your view on some of those stocks that are feeling the heat this afternoon. What's the view on PVR? And have you had a look at the charts as well of Minda Corp?
So PVR for the last many months has been sideways relatively. 1550, 1600 is the major support. 1900 is a major problem. 2000 was the price point where it was when the merger got announced. So overall, till the time it holds above the 1550, 1600 mark, the stock remains a sideways case. It's only when we break 1550 the trend changes. On the upside, a similar price point would be roughly 1780 to 1800. So it's been a tight range for the last 2 months. So no view as of now. But once it crosses either of them, then that would be a trend changer move. Minda Corp, a similar case. The stock actually has made a very strong base at 190 to 200 zones. It gave a breakout about 225, went to 240, and again flipped back to the lower end of the range again. But overall, the trend is positive out here. It's gone through a good 1.5 to 2 year consolidation. It's actually a buy with a stop loss at 195 and an upside to 280 in the medium term.
What the market was doing this week so far. So the Nifty has managed to eke out minor gains. Let's see how actually today pans out. But for now, it's showing a gain of just around 0.3% for the week, though the banking index was down 1.2% and ditto for the mid-cap index as well. What really did well this week was the IT sector. So that's one index which was up around 0.4%, followed by energy and metal, which were up around 0.5%. On the losing side, it was the PSU banking names, realty, pharma, as well as autos, which were under pressure. Stock specific, Tech Mahindra saw a gain of around 11% this week. UPL was up 6%, and then Reliance Industries also made a big move of around 4%. Chakri, your take as far as some of these big movers this week is concerned? Tech Mahindra, UPL, Reliance?
Yes, I think if you take it in that order, information technology actually as a sector remains very strong. Of course, Tech Mahindra moved on expectations. There will be a new CEO appointed fairly soon. Outside of that, if you look at the overall sector, the revenue is growing 14%, bottom line probably 13-14%. The companies are trading anywhere from about 25 times to 14 times, depending on whether it's a TCS or a HCL Technologies. So the earnings growth is still intact. So I think that as a sector does well. Reliance Industries, again, it's O2C business. We'll see a pickup in the coming quarters. 5G rollout that will happen in the telecom business. Retail, after the current slumber, overall it'll pick up. And four, importantly, the green energy business, I think, will now add also a meaningful number to its sum of parts. So that also looks good.
Okay. In fact, talking about the Nifty gainers for the week gone by, there was definitely Tech Mahindra, which lapped up an 11% move. There was Reliance, which came back with a 4% move, although Reliance midweek did see a fair amount of, momentum, but hasn't really managed to follow it up, not today. and not yesterday either. ONGC actually has been one of the top gainers as well, along with Tech Mahindra, with a solid 6.5% move coming in for it alone. UPL Apollo Hospitals have been some of the other nifty movers in that case. Kunal, Reliance and ONGC, do you see them catching up momentum again next week?
So in the morning, I did this Chartbusters link on energy index, and that clearly shows that the energy index is at a major, multi-year low, at least in terms of indicators. And in historical, precedents, whenever that has happened, it's led into the energy index going into at least a 10% breakout. Of course, that the time span for that up move, is somewhere around 1 to 3 months on an average. Now, if you try and look out for the higher weighted stocks over here, Reliance, ONGC, I think Tata Power, NTPC Power Grid, these are the names which are part of the energy index. And we've seen the last 2-3 days, it's the likes of Reliance and ONGC yesterday which made a comeback. Reliance started this week. You also have names like Power Grid and NTPC which are also trying to show signs of a mild bounce back, which means that it's the move on the entire energy index which should be at play. And I think Reliance should play a heavy role in this kind of an up move. So I would continue to have a very strong bullish stance on Reliance even from current levels. And I think traders who are looking out for buying the dips, 0.5%, 1% dip for Reliance Industries after the last 3-4 days of price action move is a good opportunity to enter the stock.
Right. Okay. While Nifty Energy definitely was holding out, what did lag was Realty as well as PSUs. Naresh, within the entire PSU pack, are banks the weakest link?
So in PSU banks, the weakest link is the small PSU bank names. The larger ones still look okay. But if you look at the PSU pack, the rest of the PSU pack is very interesting. When you look at the CPSE ETF, the PSE ETF, all those indices are coming at 5-year highs. Very close to it, just 3-4% away. And that is where a lot of these names come up. ONGC is one part of it, which is making a 3-4 month high. NTPC is very close to a new all-time high on a dividend-adjusted basis. Power Grid looks interesting. Bharat Electronics is an underperformer, which looks interesting. So the public sector enterprises look more interesting than the PSU banks pack. So one should start focusing more on the PSEs rather than the PSU banks.
All right, PSCs rather than the PSU banks. That's the view coming in. In the meantime, Chakri, what's your sense when it comes to the entire auto space?
I think auto space, again, similar things. Slowing consumer demand generally will have an impact. But again, with elections coming up in so many states, usually you will have an elections year to pick up in automobile sales, and valuations are clearly on their side. Clearly, EV as a theme is here to stay. So that way, TVS Motor, Greaves Cotton, all these companies will do well because one, A, valuation is on their side, B, volumes on the EV space are coming through. And 3, you think after the current whole cycle of interest rate hike, I think as it peaks, you'll see a return of demand for the two-wheeler sectors.
All right, it's Friday, and thank God for that. It's that time of the week. It's Friday, and thank God for that. It's that time of the week when we also get you a to-do list. What can you do over this weekend? Let's take a look as to what ET Now recommends.
Hello and welcome to ET Now Recommends. I'm Ankita Saxena and I'm back with all the new recommendations for all the upcoming events and new releases so that you don't miss out on any of the fun. So let's get started. The stage is set for the world's #1 DJ, Martin Garrix. Get ready for the biggest ever Sunburn Arena tour across 8 cities this holy season. Catch the award-winning artist perform live in your city on 3rd of March in Bengaluru, 8th of March in Mumbai and 11th of March in Delhi NCR. Limited early bird tickets are live now. Book yours before they sell out. And a new festival has hit the Indian cities with the launch of Oddball Festival taking place in Mumbai, New Delhi and Bengaluru. Rock and punk trailblazers, the Aristocrats will appear as a headlining artists in all 3 cities for the inaugural edition and travelling event. Now, while those were the events that you could be attending, here's a slate of new releases that promise entertainment to the fullest. First up is Kartik Aaryan starrer the much-awaited Shehzada.
Directed by Rohit Dhawan, the movie focuses on a young middle-class man whose life takes an unexpected turn when he discovers that his biological father is a millionaire. The movie hits the theatres on the 18th of February.
तुम बहुत बड़ी गलती कर
And
रही
Aditya
हो.
Roy
I know what I'm
Kapoor is
doing.
all set to headline Sandeep Modi's new series, The Night Manager, that's dropping on Disney Plus Hotstar. It is inspired by Tom Hiddleston's primetime Emmy Award-winning series with the same title. The intriguing plot of the upcoming drama follows an undercover agent who is adamant to bring down a dangerous arms dealer. And finally, Yami Gautam is set to start the new year with a strong performance in Anirudh Roy Chaudhary's thriller drama Lost. The movie, which releases directly on ZEE5, will revolve around a crime reporter who is exposed to a whole new world of politics, love and betrayal that exists in the society. Well, with that, it's a wrap on ET Now Recommends for this week. I'll be back next week with some more recommendations.
Lots to watch when it comes to
I'm wondering what you're going to watch out of that entire list, Anisha.
Right now, I'm hooked
Sunman
on.
Arena movie.
Right now, I'm hooked to the Korean show, so I'm.
You too?
Yes,
I'm
yes.
shocked.
Guilty as charged, but yes, now I'm hooked on to those, so I'm just busy with the slew of the Korean shows. But yes, these will form part of the next list as well. But separately for the market, 17,950 thereabout is where we are at. But time now to get some of the BTSC ideas out of the way. Kunal, you go first.
So mix of large caps and mid caps. Coal India is something which I would recommend as a buy, showing signs of strength. Minor breakout on the hourly charts. So buy with a target of 226, stop loss at 212. And ABFRL, a stock which I recommended in the morning as well, looks very attractive. 250 seems to be a very strong base now, which has been established for the stock in the last 1 month. So keeping 254 as a stop loss, maintain those targets of 270 on ABFRL.
Naresh, what about you? What's on your BTSC radar?
So first is a buy on Wipro, which looks interesting as a risk reward trade. Last 2 week closer at 400 and bouncing out from here and being the worst performer in the whole IT pack relatively. Expecting this bounce to continue over next week. A stop loss at 400 and target price of 415 for BTST. Second is a buy on NTPC, which continues to show relative strength. On a dividend adjusted basis, it's at a 2 week high today. A stop loss at 167 and a target price of 172.
Those are the BTSC ideas coming in from our chartists as well. Not big movers in the last few minutes. It continues to be L&T and Ultratech, which are leading when it comes to the frontline index. But if you look at the broader markets, JBM Auto is up now 5%. You also have Home First Finance, Prestige Estate, JK Cement, which are actually doing well. Kunal, the entire real estate pack has been very iffy of late. There are, some spurts coming in, but then it fizzles out very soon as well. Is there any name which is giving a high conviction in the real estate basket?
Yeah, I think even the markets are a bit iffy and so far. But I think it doesn't come as a surprise that there is lack of conviction, momentum into these sectors, and especially the high beta sectors, because real estate, metals, these are high risk sectors, and traders, they generally latch on to these kind of sectors as well as stocks when there is a high degree of confidence in the markets. Right now, there is hardly any confidence on the near-term trends for the indices, and that's one of the reasons why you might see a flip-flop move into these names, and trying to buy momentum into these kind of high beta sectors in a market which is consolidating may not be a fruitful strategy.
Okay, that's the view coming in. Meanwhile, Naresh, let's get in a check as to, what your outlook is on the sector that's under pressure in today's trading session. And without a doubt, it's real estate as well that seems to be feeling the heat, along with the banks and the other high beta pockets like IT as well as the metals basket. Within the entire real estate space, there's IBREL that's down in trade, Phoenix Mills, Oberoi Realty, and even Godrej Properties. What's your view? Any lucrative options to buy into?
So I would still be watching out for them. Say real estate has gone into a period where every stock has a very different trend and the momentum is not great either on the upside or on the downside. The space I would be looking out for is banks, which is where there is still some opportunity left. Metals is still in a sideways consolidation after the big fall. So the only space which looks interesting at this point of time is to look out for banks, and banks like an ICICI Bank and HDFC Bank, which have one HDFC which has not gone anywhere, ICICI which has done its correction.
Okay, that's the view coming in, keeping some of those stocks on the watch radar. A quick word then, Kunal, as to what the outlook is for the Nifty as we step into the coming week.
Well, I would still not be bearish on the indices. I would still be have a bullish bias on the index. I think till the time we hold about the 17,800 mark, which is the 3-day swing low for the Nifty, we would still hold on to the positive bias. And in the last 2 days, the data for rollovers, which of course would start off, are a lot more intriguing. So, for example, there was, I think, 2 days of strong unwinding of open interest on the current month futures, and there was a lot more stronger built up for the futures in the March series. The premium for the March series is still at 120, I think 120, 25 points the last I had seen. So again, that's an encouraging sign so far. So I would probably expect that if the index holds on to that 17,800 mark, would still remain bullish on the indices. Expect that this consolidation would eventually lead towards a breakout sooner than later.
Okay, let's begin winding up trade then. Chakri, Naresh, Kunal, great to have you guys on board with us as always. A little bit of lift off from the session lows, but we're still down about 113 points on the Nifty futures and closing bell. Sub the 18K mark, which now seemed like only a flash in the pan in the week gone by. 17,944 is where we're shutting shop for the Nifty spot, 949 for the Nifty futures. While L&T has managed to hold out, so have some of the cement plays like Ultratech Cement, JK Cement, Shree Cement, Ambuja Cement. But besides that, it's all been a sea of red. Reliance and ITC, the two heavyweights, they only managed at best a flat close for themselves. Amidst the losers, Nestle, of course, has been a rank underperformer, down 3.25%. Adani Enterprises, IndusInd Bank, which lost about 3%. And then, of course, M&M, SBI has been a stark loser all of this week. And then technology also didn't do a whole lot. So TCS, Infosys, they were all laggards in today's session, along with a Hindalco as well. From within the broader markets, Biocon, MGL, Indiabulls Housing, Ipca Labs, and then Idea were some of the other losers. But with that, we're going to wind down in this edition of Closing Trades. Thanks very much for watching.